Hello and welcome to this week's Market Matters weekly video update. I'm Harry Watt, joined by James Garish. It is Wednesday, the 1st of February. We're off to a flyer this year in markets, first video of 2023. So we're going to kick things off with performance, how we've gone in January. Given markets are strong, how did our portfolios hold up against that decent backdrop, James?
Happy New Year, Harry. Happy New Year to all our viewers out there and subscribers to Market Matters. It was a really interesting January, and I've been away for most of it, so I should stay away because the market's been pretty strong as a result of that. But if I think back at the end of December and at the start of January, there's a lot of negativity about. We wrote a lot in our reports around negative market positioning, so high cash levels, low allocations to equities, and go figure, the market has rallied in terms of the S&P ASX 200, 6.2% for the month. The S&P 500 was the same. The Nasdaq did better, and the small caps over in the US did better as well. So it was a really positive backdrop in terms of markets. The Market Matters growth portfolio for the month did 8.9%. It's up 21% this financial year, which is a fair way above its benchmark. Obviously a strong result. The income portfolio is up 3.18% for the month of January, and it's up 10.5% financial year to date. So that's a bit of a lower risk portfolio. The emerging companies put on 8.31% for the month, and it's up 15.5% for the financial year to date, and the international equities did about 6.5%, and that's tracking at around 13% financial year to date. So the growth portfolio was a standout. It was all around our positioning towards the growth sector. We were overweight in technology. We were, that propelled our performance in January. So as we sit here at the start of the year, Harry, I'm happy with how portfolios have performed, and we're happy with how they're positioned going into reporting season.
Yeah, so on January as a whole, it was a really solid month for equities, rebounding out of a pretty weak end to 2022. You talk about positioning in markets and where that was at the back end of last year. Has that shifted? Have you seen a big shift there? And is that what's dragged this market higher into the start of the year? Well, into the end of January and the start of February?
Yeah, I think positioning was really key. So, back end of December, everyone was bearish, low equity allocations, high cash allocations. As we move into January, I think there's been more rhetoric around, maybe we're not going to go into a global recession. Maybe earnings are not going to pull back as much as the market had been pricing in. So there is that change of rhetoric that I'm sensing in the market. I don't think there's been a huge change in terms of overall positioning. I think there's been an incremental change, but there hasn't been a huge shift into an ultra bullish mood. I think one of the things that I look at regularly is what's being written about in the media, and how the consensus is, the rhetoric the consensus is reading effectively. So you can't open a newspaper or listen to a news broadcast without interest rates being spoken about. Like, I'm sick of it, and I'm sure we all are out there, but it goes to show you markets don't really move on the known knowns. So we know a lot of pain is coming from higher interest rates and this mortgage cliff that gets written about so often. So I sit here and thinking about what's happening for the next 11 months of this calendar year. I'm more focused on what is not the consensus trade. So I think we'll get on to sectors, etc., but we've got some nuances around how we're thinking about sectors as we move into this reporting season and beyond.
Yeah, reporting season's starting to pick up pace. We've seen a couple of smaller reports early on this reporting season, but this tends to pick up later in February. James, what are our views on this reporting season? Is it going to be a cracker? Is certain sectors going to stand out? Is there a couple of things you're looking at heading into this reporting season?
I think it's going to be all about, the market's one thing. Individual sectors are going to have a lot of variance in their performance, and then stocks within sectors is probably the flow on from that. So if I think about the big sectors in Australia, so resources. So we had IGO out yesterday just talking about their first half numbers. Costs were a big impost for them, so higher costs. They also had lower production and lower realised pricing. But I think that if I pull one thing out of that report and think about it for the reporting season that we're about to enter, I think costs for the miners are going to be really important. I also think obviously the mining sector has been really strong going into it, so I'm a little bit concerned about that. The resources trade in the short term as we go into reporting season. Obviously CBA in the banks hit an all-time high today again. There's a lot of optimism baked into that cake. I think I think there should be some optimism given the outlook for it, what's happened with interest rates and the impact that's had on bank margins. But that's probably priced in. I'm focusing more in terms of the opportunity set we see in front of us is around some of these stocks that have been beaten down over the past 12 months on the back of concerns of a looming global recession. Things we might not have the hard landing that everyone's been anticipating. So there is a lot of negativity in terms of expectations going into this reporting season. So look, at the end of the day, we're going to carry a bit of cash. We've got 12% in our flagship growth portfolio, probably feels about right. We want a bit of ammunition to buy into volatility created by reporting. But I think it's really important, like we played last year, it's about playing eyes up footy. We've spoken about it multiple times, but just keeping finger on the pulse, and the macro dynamic is really key, and feeding into that is around how investors are positioned, and we've seen that the most obvious one in January, Harry, where it was up 6.2% for the market.
Certainly, the market's only just below all-time highs, but there are still some sectors that are lagging in some areas of the market, that there are still opportunities out there.
I know it's a cliche, but it's a stock pickers market, and there's no time in, we are talking our own book because we are stock pickers and we are active in the market. But there's no time in history I've felt so strongly about that as I do now going into calendar 2023, and we're already in February. Harry, flies by already.
Speaking of 2023, you can't be a market commentator and not be asked about your view for the year. What's 2023 hold for markets? Are we going to crack through that 7,600? What's going to take us there?
I think we'll have I think we've, if I'm taking a stab in the dark, from an index point of view, I'm very neutral 50-50 on the index at the moment. I wouldn't be surprised if we saw, the direction of most pain in the short term seems to be up. So I wouldn't be surprised if we pop higher at the start of this year, and that's probably goes against consensus. But there will be a time where we fret about higher interest rates, we fret about inflation, etc. during the year, and I think we'll have a reasonable correction, followed by the expectation that inflation is now behind us. The quantum of interest rates of increases have been done, like the magnitude of them has been done, and then we'll set up for a good rally in markets in the second half. So I think the key takeout there is volatility will be in play this year, and I think January shows you that. Expect the unexpected. I didn't sit here thinking we get a 6.2% rally in January. So I think the market's going to be very dictated by short-term sentiment, investor positioning, and macro flows would be my view, Harry.
Yeah, it's been a cracking start to the year despite all the negativity out there, James. That's our first video for 2023. I hope you've enjoyed the start of the year. I hope you enjoyed our take on what's ahead for 2023. And as always, look out for those Market Matters reports.